In this video, I'm going to go through how we saved our client $3.7 million of income taxes, give you an idea of the framework to make that happen so that you can look at this for yourself and see where you're overpaying income taxes. Hey, my name's Ed Lloyd. I'm a CPA and certified tax strategist. We work with businesses that have $2 million or more in revenue on an annual basis slash their income taxes. Our goal for all of our clients is to save them $1 million or more in income taxes. To make this a possibility, there are two key components that you have to have. One, you have to have the education on what's going to work for you, and then two, you've got to apply it. Those two pieces together give you the potential to be able to dramatically reduce your income taxes. So how do we do that? Well, there's several things we look at. From a category perspective, we look at entity structure, income shifting, missed deductions, loopholes, investments, tax acts, and new tax laws that impact your business. We have a simple system that we utilize to be able to grade all of our clients, and I want to share that with you today. Red light, yellow light, green light. In this situation, you need to look at all of these categories and rank yourself. I've got a red light. I haven't addressed this. They're wasted tax dollars here. I need to focus my energy and attention here. Yellow, maybe there's a couple of shifts that you need to make to get you where you need to be. Green light, everything's working well. I've maximized this. This needs to be looked at on an annual basis because where you are today is not going to be where you are tomorrow. So it's important that you look at all of these key areas and grade yourself on an annual basis. All right, now you understand the framework to how to make all this work. Let's look at some specifics for one of our clients and see how we're able to significantly save them income taxes for the year. Our client came to us and she had a great year. Fortunately, she came to us at the beginning of the year so we could do tax planning to slash her income taxes. So what areas do we focus on? Entity. She had the wrong entity structure set up. In her mind, she was working for asset protection, but it was really working against her. We were able to change the entity structure for her, which saved her $411,000. Tremendous savings from a change in entity structure for the year. Coupled with that, there's a missed deduction that ties into that, which saved her $111,000. Just those two moves right there, looking at one of our categories, was $500,000 in tax savings. How much cash did that cost her? Zero. Moves like this are utilizing your current structure and be able to maximize income taxes. But she still had a huge tax bill, so we're not done. Next up is investments. She was able to make an investment in a company that not only increased her cash flow for the year, but slashed her income taxes. That was $331,000 of tax savings she was able to utilize by putting the money into this investment. I told you this is a big tax bill. We're not done yet. Next up, missed deductions. She had 3 large deductions that she was missing and just not aware of. We're able to analyze her situation and show her all the missed deductions that she had and show her the missed deductions and the benefits available for her. This is over $2.7 million in tax reduction she was able to utilize this year from missed deductions. And we're not done yet. There's still some other missed deductions that she had, smaller in nature, but still help build cash flow and cut her tax bill. 4 of the core deductions we look at for business owners, she was missing all 4 of those. That generated another $50,000 in cash flow, costing her 0 in cash. So when we look at this tax plan for Michelle, there are a lot of areas where she had red lights. She had red light on entity structure, on missed deductions, on investments. When you add all these together, it was over $3.7 million in missed income taxes. And that's still not all. She was making investments during the year in short-term rentals. Through cost segregation studies, she's able to pull in an additional $300,000 of tax savings in this current year. And with all of these solutions in place, we had finished the tax plan for her for the year. So what did we hit? Entity structure, red light. We turned it green. Investments, red light, we turned it green. Missed deductions, red light, we turned it green. Loopholes, red deduction, we turned it green. This is a process that we use for all of our clients, and one that I would recommend that you do as well. Look at where you are today, analyze these systems, and say, am I red, green, or yellow? But if you feel like you're at red and need help getting into the green category, that's what we're here to help you with. We help clients throughout the year so you pay the least amount legally possible. To find out how much you're overpaying, click the link below and schedule a time for us to talk. We'll go through your situation and find out where your red, green, and yellows are. Don't forget to share and like the video. This is Ed Lloyd, looking forward to helping you save money on your taxes.